Hi everyone, welcome to Quantsapp and welcome back to yet another video. In this video, we will understand about max pain, so option pain and how exactly we can go ahead and use option pain on the expiry days is something what we will learn in today's video. So talking about max pain, when it is most effective, it is most effective on whenever we are on the expiry day. So it works best on the expiry day, and also it works based on specifically two indices, Nifty and Bank Nifty, wherever we find good liquidity. So, Nifty, Bank Nifty is something what I have tried it on, and few stocks such as highly liquid stocks such as Reliance, SBI, which are decently liquid. On those stocks, this theory, this entire concepts work a bit better. Okay, so now what is max pain? So let's understand what is max pain first. Okay, so what is max pain? What does max pain as a word, as a standalone word, tell you? It tells you that where maximum pain is going to get caused. So similarly in options market, max pain tells you where option buyers are going to face the most loss. Okay. So in derivatives, profits are equal to losses, right? And losses are equal to profits. That means buyer's profit is seller's loss and seller's profit is buyer's loss. So max pain will tell you that, okay, if market expires at a particular level, most of the option buyers, be it call option buyer or be it put option buyer, most of the option buyers, they will face the maximum loss. Okay. And that is where market is expected, or जो option writers hai, the option writers, they are expecting the market to expire around that level. Okay, so understand one thing: when a seller will be profitable, when most of the options expire out of the money, when they expire worthless, right? That is where option seller will benefit. So this theory, it works on a very simple ground, wherein wherever you see the max pain happening, wherever you see option buyers are making the most loss, okay, so it is assumed that market might expire somewhere in that vicinity. Number one. Number two thing is, when we look at max pain, just understand one thing, that if buyer is losing money, seller is making the most money, right? So when option seller, like when exactly will option seller make most money? If most of the options expire worthless, and that is where max pain comes very very handy on the expiry day. So in Quantsapp, web.quantsapp.com is our link. You can navigate to the app from the link in the description box below, or the icard out here. So if I just go to option pain over here, you will find, the max pain, the option pain level. So now the left hand side is showing us the put writer's loss, that if the market travels at a specific level, in terms of crores, how much loss put writers will make. And on right hand side, if the market travels to that specific level, how much crores of roughly loss call writers will make. Okay. So now wherever you see this max pain, okay, what does this tell you? This tells you that at this point, right now, max pain or option pain level, you can call it anything, but right now max pain level is placed at 17,350. That means writers are expecting market to expire somewhere around 17,350. Okay, so how does it optimize your options trading using Quantsapp? Click the link in the description box below, apply code YTUBE and get a 2 days additional access to all the advanced option trading analytics and be a data driven trader with Quantsapp. Thank you. It helps us in gauging key expiry levels, where the market participants are expecting the market to expire, right? And wherever the max pain is, market is expected to expire in that vicinity. Okay, it may not be exactly the same level. That means if there is 17,350, what we can see on our screen right now, it may not exactly close at 17,350, but somewhere in the vicinity. Okay, now coming to the other things. Okay, coming to the other things, now looking at max pain, what else can you conclude? Okay, so what else can you conclude is, let's say, okay, so let me, before I show you, okay, so what the conclusion is, that wherever the max pain is, market is expected to expire somewhere around that vicinity. Okay, so but we at Concept, we have optimized the existing traditional theories in the app. So we have option gain over here. So option gain is much more advanced and much more optimized. Why? Because it also considers the premium inflow to the option writer, and option gain shows us at what level option seller is going to make the most money. Okay, so option pain and gain are almost similar, only differences. The gain level will show it also accounts for the premium which is getting inflowed to the option writer while writing that option. Okay, so over here if you see the max pain and option gain was the same. Sometimes there would be minor difference in option gain and option pain. Okay, because option gain is accounting for the premium that the writer is receiving, and it is showing us logically where according to the premiums received by the writer where a realistic max gain point where option writer would have made most money in the market. So at this point 17,350 is the level where option writers are expecting the market to expire, right? And that is the level. If market expires over there, most of the option writers will make the most money, right? And that is what the option writer wants, that, right? Where will he go ahead and create something, right? Where will he go ahead and create a position where most of the options should expire out of the money, and 17,350 is that level. Okay, so now how does it help when we are trading? First thing, if you are on the expiry day, it will give you hint. Will it be 100% of the time right? Maybe not, but it will at least give you a bias. It will at least give you a hint that okay, this is where the market is expected to move. Now let's say for an example that if the market is at 17,400, okay, let's say if the market is at 17,400 and the gain level is placed at 17,300, okay, which means that the market, okay, the market is positive, it is up, so it might come down a bit and settle somewhere around the gain level. Okay, this is the first instinct. Second instinct would be, let's say when the market opens on the expiry day, so the gain level and the market's price is same. Let's say 17,350 is market's price and 17,350 is the gain level. But now the market will not remain exactly where it is, right? It will keep on moving. Let's say there is a breakout happening on Nifty. Let's say market moves to 17,450. Now, how will you know that on the expiry day that this breakout is more genuine? One of the ways to identify it is the gain level. Okay, let's say if there is a breakout happening in the market goes to 17,450 from 17,350. At the same time, the gain level also makes a shift. Gain level also moves along with that. It moves to 17,400. That means you know the option band has shifted, the writer's range has shifted, so the breakout it's likely to sustain. Okay, first thing. Second thing, vice versa on the downside, if there is a breakdown and gain level shifting in the same level, that will give you some sort of negative bias. Now coming to one of the most important thing, which is equilibrium level. Okay, which is EQ level over here. So what does EQ level tell you? So EQ level tells you that where exactly there is a break even point. Okay, where option writers, be it call writer or put writer, where they are not making money. Okay, so understand one thing, that whenever we are looking at this data, okay, whenever we are looking at this data, what we are trying to catch is panic. Okay, so now EQ level will tell you where exactly the panic will start, and understand this thing very carefully because it is a bit important. Okay, at this level, neither call writer is making money, neither put writer is making money. Okay, when will a call writer get trapped? On the expiry day. He will get trapped when his break even point has been breached, has been broken, and the market is sustaining above his break even point and his position is in loss. Again, to repeat, on the expiry day, when call writer will get trapped, a call writer will get trapped when his break even is broken and the market is sustaining positive. Okay, it is going up and up and up. Okay, what does that tell you? That tells you that these option writers, the call writers, are getting trapped and they will unwind their positions, they will cover their position, and due to that short covering on the call option, there would be a good up move happening on Nifty. Okay, so now what we need to do, we need to observe the EQ level and the market's price. Does market's price breaks EQ level from the lower extreme, right? So let's say, let me just draw it and explain you. Let's say this is EQ level. So what we want is, we want that market, let's say if it is moving like this and it breaks out. Okay, So all these call writers who have no time left whatsoever, they are bearing a gamma risk, they will all start to unwind their position. Why? Because it is the expiry date, they can't do a lot of adjustments. So we might expect a breakout happening in Nifty or the index, whatever we are trading, right, on the expiry day because of the short covering happening on call. Okay, and the vice versa on the put side. So I explained most of the things for a breakout on the upside. You can just reverse the things on the negative side as well. And yes, folks, option pain, to summarize, it is the buyer's loss. Opposite of that is seller's profit, right? So max pain will show you what is the key expiry level. Number one, option gain, we have made more adjustments or more optimization to that, and we are considering the premiums inflowed by the writers and giving you more realistic gain level where option writers might make most money. Okay. Now coming to EQ level, why is EQ level important? It will show you more realistic panic because that is the break-even level of option writer, right? Be it put writer or call writer. If the breakout is on the upside on the EQ level, then most of the call writers who have sold it, they might be sitting on a heavy loss, they might exit, and the vice versa on the downside. So to access option gain, you can navigate to the link in the description box below or also on the iCard over here. Okay. And yes, folks, thank you so much for joining me up till here. Bye bye. Take care and see you in the next video.